Ladies and gentlemen, good day and welcome to the Freshara Agro Exports Limited H2 FY25 earnings conference call hosted by AKMIL Strategic Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajdeep Patil from AKMIL Strategic Advisors. Thank you and over to you, sir.
Hello. Good evening, everyone, and very warm welcome to H2 FY25 earnings conference call of Freshara Agro Exports Limited. I am Rajdeep Patil, representing AKMIL Strategic Advisors Private Limited, and it's a pleasure to host this session on behalf of the company. We appreciate your presence here today to discuss the financial and operational performance of Freshara Agro for the second half and full year ended FY25. Joining us today from the management team, we have Mr. Junaid Ahmad, Chairman and Managing Director of the company. Now, I would like to hand over the call to Mr. Junaid Ahmad. Over to you, sir.
Thanks, Rajdeep. Good evening, everyone. I am Junaid Ahmad, Managing Director and Chairman of Freshara Agro Exports Limited. With over a decade of leadership in the agri-export space, I've had the privilege of witnessing Freshara evolve from a regional enterprise into a globally trusted brand. It is my pleasure to welcome all our investor analysts and stakeholders to this earnings conference call for the second half and full year ended FY25. I extend my sincere gratitude for your time, interest, and your continued support. Freshara Agro Exports Limited is one of India's leading exporters of preserved gherkins and pickled vegetables, operating 2 modern facilities in Tamil Nadu. The company serves over 40 countries across Europe, USA, Russia, and many more. With a strong focus on quality, sustainability, and farmer partnerships, backed by global certification and a network of more than 4,000 contract farmers, Freshara stands at the forefront of India's agri-export growth story. Financial year 25 has truly been a transformative year for Freshara. Despite global headwinds, we delivered strongly on our strategic commitments and further deepened our market presence. I am pleased to report that we closed the financial year with a total revenue of 260.68 crores and EBITDA of 46.23 crores and a PAT of about 28.79 crores, a significant leap from the previous years. Specifically in H2 FY25, our total revenue grew by 42.58% over H1 and PAT increased by 53%, driven by strong volume growth, operational discipline, and improved efficiencies. The EBITDA and PAT margins also saw sequential improvements, reflecting our ongoing focus on cost optimization and quality-driven growth. A major milestone this year was the operationalization of our second manufacturing facility in Tirupattur district of Tamil Nadu. Spread across 8 acres, this facility offers a processing capacity of about 75 to 100 metric tons in a day and a scalable retail packaging line of about 18,000 jars per hour. Powered by a 100 kilowatt solar plant, this investment aligns with our sustainability vision and is already enhancing our margins and productivity. We've also expanded our product portfolio, adding high potential items like green peppercorns, corn kernels, olives, and white onions, each of which have been well received in the global markets. Our diverse packaging formats now cater to industrial, food service, and retail segments, positioning Freshara as a preferred supplier across the value chain. We are equally proud of our NSE listing in October 24, which has ushered in a new phase of institutional visibility and accountability. Our financial foundation remains strong with a stable credit rating of CRISIL, BBB, long-term and A3 short-term, supported by about 84 crores in bank facilities, ensuring we are well equipped for the future growth. I am also pleased to share that our current order book stands at about 82 crores, providing strong visibility and momentum as we move into financial year 26. Looking ahead, we remain optimistic and future-focused. With rising global demand for clean label and naturally preserved food, Freshara is well positioned to lead. Our enhanced infrastructure, diverse portfolio, strong farmer network, and expanding global presence gives us confidence to pursue a clearly defined benchmark of 30% annual growth in the coming years. With that, I now open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nishant Agarwal from Kohinoor Investments. Please go ahead.
Hello. Am I audible?
Yeah, hi. Yeah, please go ahead.
Yeah. Yes, sir. First of all, congratulations on your good numbers, sir.
Thank
On a
you.
good set of numbers. And so my first question is, we've shown around 250 crores of revenue this year. So is it possible for us to show additional revenue of 100 crores, which will in total 350 crores in the coming year, sir?
We are targeting 30% growth. With that, we should be able to, achieve the sum, I feel.
Okay. Understood, sir. And the investment of around 35 crores that we've done, is the entire investment completed, sir, or is some amount remaining?
Almost 90-95% is completed. We have the line now doing production. We are doing some improvements it's an 8-acre land parcel. So we are planning some additional storage spaces so that we can, store our produced product. So that little bit of investment is there, but what we mentioned is already landed there.
Okay. Understood, sir. And one last question regarding the new portfolio expansion of the additional products like the green peppercorns, corn kernels, olives, and white onions. So, are we planning to set up a new factory for this, or is it in the same factory that these products will be manufactured?
These are value-added products, and these will be, at the moment, manufactured in the same facility.
Okay. Fine, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Kumar Saurabh from Scientific Investing. Please go ahead.
Yeah. Hello, sir. Congratulations on good set of number. I have 2-3 questions. So on 100 crore of rupees 100 crore of sales, how much is the working capital do we need?
We are able to rotate the funds 2.5 to 3 times. So roughly, if you have about 35 crores, we should be able to do 100.
Okay. So that means almost 30 crore of working capital needed. And let us say if it is coming at around 10% interest rate, 3%, 3 crore should go there. And our EBITDA margin is around 18%. So can we assume that on a 18% EBITDA margin, we should be able to convert 100 crore of sales into 15 crore of operating profit, given 3 crore will go in working capital and all?
It is difficult to speculate like this because one, we are trying to work with new products, new territories, and we are trying to be aggressive in the market. As a thumb rule, maybe it is possible, but on the functional basis, these things vary quarterly, half yearly, and year on, because the pricing for these different products is different. There's no fixed margin for each product. I mean, there's fixed margin for different products. So each on a cumulative basis we are comfortably doing the numbers what we are doing now. But going forward, when we add value-added products, probably we'll do better with this.
Okay. So sir, let's take it other way. And I know we are in a major growth phase and we need to build inventories and all for that. But let us assume if there is no growth on a sustainable basis, we are able to do this 100 crore. Take the conservative scenario. How much of EBITDA will be able to convert into cash profit after all the working capital and all?
1 minute. Can you just rephrase the question for me, please?
So let us say we are not investing for growth in terms of building inventories and all, and we are doing a steady state 100 crore of sales. How much of the sales we will be able to convert into a sustainable operating cash flow?
Should be most of it, no? Because you are not investing any additional inventory, but you are able to sell off everything.
Okay. No, but we are spending in working capital and all. For that, we have taken some debt and all. So as you told,
Yeah, let me do this for you. See, the cost of interest is somewhere around 8 or less than 8% for us because we come under the packing credit facilities. And after factoring in all this, we are able to make the current EBITDA margins of about 18%. So you are saying that if we don't grow and if we just sell the same 100 crores, you are saying?
Yeah.
Then we wouldn't require so much working capital, no?
Okay. So at least I can assume 70%, 80% of that EBITDA, at least worst case, that will get converted into operating profit.
Should be, yes.
Okay. And sir, in the investor presentation, you have spoken about the latest CapEx, 35 crore of CapEx, which will give us some 2,200 to 250 crore of sales. So this CapEx, sir, does it include only machineries and all, or even land has also been included, or land was already there?
It is including the land, but the only thing is this land may not have the current value. As you know, this land was purchased about 5-6 years ago. So today the value appreciation is very high. So assuming conservative numbers for the land and with the construction and the machinery involved, this is the CapEx we have invested.
Got it.
Has been spent on it.
Got it. So again, sir, which means almost on 20 crore of CapEx is giving you almost 100 crore of revenue and 18% of EBITDA margin. So worst case, in 2 years, you will recover all your investments. Is it a correct inference?
It's a long shot, but I think in 2 to 3 years, we should be able to recover a lot of it.
Okay. And sir, last question, if you can explain the business in a little more detail in terms of supply chain. What I want to understand is, from a risk perspective, whether the prices of raw material are changing or end price is changing, how we are balancing the risk side in the supply chain, right from procuring the raw materials from farmer and ultimately delivering. Basically, I want to understand your business operation and supply chain in a little more detail, sir.
Okay. We do our sourcing is based on contract farming, most of it. There's some part of it which also comes from facilitators, who also follow contract farming. So contract farming is where we give a fixed price to the farmer, and the cost of procurement is almost even or very similar across the years. So through the years, the price of products have gone up also slowly, and there's also a dollar appreciation. The Indian rupees has come down. So thereby, year on year, we are able to at least calculate 10 to 15% margins on our products. This fixed procurement of raw material helps us have the same numbers throughout the year. The price of product wouldn't swing very, very high. They are majorly now today after the global, a lot of wars which have come up. There are a lot of fluctuation in the global freight market. So global freight is you can say at least 10-15% of the freight contributes to the final end product price. So when the freights are really down, the product prices are also down. When the freights are really up, the product prices are also really up. These freights are compensated by the customer. End of the day, we work on our margins, where we source, we produce, and we export. So this part is very stable. The only fluctuation part is the transportation part. And through the years, as I mentioned, historically, rupee has weakened, and some years there's a lot of weakening where you are comfortably placed that you are able to at least pass on some benefits to the customer. Any other raw material which is associated is only packing material. There are only about 3 or 4 packing materials in our industrial packaging where it depends on your plastic prices. But again, they are also very stable. We buy packing material from listed company. There's a company called Time Technoplast. So this is our major supplier of packing material when you go for the industrial packaging. Then comes the glass products which we buy from AGI and Hindustan Glass. So these jars also do not have almost a similar price through the years. The price appreciation is very little, or maybe 1 or 2%. And we supply to 2 types of customers. One who repacks our product at the end destination, and the other is who directly takes our product and gives it to the retail chain. This particular line where the white label products are, the prices are even further stable because it's a premium product and the contracts are long-term contracts. There are no short-term or spot contracts in this particular business. So this business helps us have sustained margins through the year. The industrial packaging business also has long-term contracts and a lot of short-term contracts or spot contracts. which are sometimes very highly profitable or sometimes a little less profitable. So on an average, because we are in both industrial packaging and as well as retail packaging, the more we do more retail packaging, the margins are becoming better. And today's contribution of retail packaging is only about 15% or less than 20%. So we are trying to increase the retail packaging contribution, which helps us achieve even further stable margin irrespective of the global market scenarios. Our supply chain is very simple. We source from the farmer. We do the entire growing, sourcing, cleaning, packing, regrading, processing and export. So from end to end, we are involved. It is literally from seed to the shelf. This is the entire supply chain which we take care of. The largest transport part of it is taken care by the shipping lines.
Got it. Thanks for such a detailed answer, sir. Thanks a lot. And I have more questions, but I'll come back in the queue. Thank you, sir.
Okay.
Thank you. The next question is from the line of Saurya Punyani from Ajay Partners. Please go ahead.
Hi, am I audible?
Yes, please.
This your new capacity. So combining this, what is our total capacity as of now?
The first plant is able to do about 50 metric tons per day. The second plant is in the initial stages. It will be doing about less than 50 tons per day, and eventually we want to stretch it up to 100 tons. So the new plant combined, you're asking me that on its peak performance, it should be able to deliver us 150 metric tons per day.
And by when we can expect this peak performance? And what is the current performance as of now?
So this year we are expecting at least the plant to function at 50% of its expected capacity with the existing line. As we need a few more months to streamline the operations and get the best tasting product out of the line. Thereon, probably in the second half of the year, we should be able to do at least 60-70%. And the next preceding year, that is FY26, we should be able to achieve 100% productivity from the new plant. The new plant also has scope for expandability, and after financial year 26, we are planning to have another production line in the same plant.
So by end of FY26, new plant will be at 100%, right?
It should, yes.
That's right. Okay. And then 27 will increase the capacity further.
Yes.
Okay. And so, what is the percentage between our own brand and white label in terms of sales?
We don't do our own branding. We do white labeling for the customer. I mean, we have all his product data, and we ensure that he takes it directly to the retail chain. So we are a B2B customer. We are not a B2C supplier. And
we only do white label.
Yeah, we are the raw material supplier of the world. That's how we define ourselves.
Okay. Okay, sir. Thank you. Thank you so much.
Thank you. The next question is from the line of Shubhranshu, an individual investor. Please go ahead.
Hello. Hello. Am I audible?
Yes, sir, you're audible. Please go ahead.
Okay. So, sir, going forward, how much margins you are expecting, operating profit margin? And can you also tell, if you have any other product like Jenkins in mind, which you will be of similar scale, which you will be producing in future? Yeah, these two questions.
Okay. Gherkins, as such, is a large volume product, and we, as I defined earlier, we are almost a raw material supplier to the world. There are some products where the Gherkins from India enjoy monopoly, and we almost contribute about 15-20% of the global supply of Gherkins. So I don't foresee a product which can compete with Gherkins because of the sheer volume which is possible out of this particular product. And secondly, we are now expertise in this product. To the last decade, we've been there, and we've been able to expertise and become very special with this. So any other product will be able to contribute maybe 5 or 10% of the turnover. I mean, it will not be able to compete head-on with Gherkin, but it will help us expand our product portfolio as well as the basket which we are offering to our customers. but none of the products come at even to gherkins. Coming on the margin part, I mean, this industry, I mean, we find that these are very decent margins in this industry, and how we are able to achieve is sheerly through the scale of operation and the numbers which we are growing with. So going forward also, what I am expecting is a sustained margin process. And secondly, since we are a little aggressive and entering a lot of bidding processes where the large buyers do not operate on large margins. They all have a fixed number because there is competition and there are headwinds, customers suppliers trying to pitch in the cheaper prices just to win contracts. So thereby, when you enter the large market, the competition is very high. Being an MSME and being able to do this number, going forward, we will be able to achieve the sustainable margins and maybe improve a bit, but may not be beyond 14-15%. But yes, our entire effort is to become better.
Okay, sir. And sir, in your pre-IPO meet, you also told that you will be extending to USA. So what's the plan on that?
USA, our overall sales contribution today as on date is about 5 to 6%. We've already signed contracts for USA. Today, there's a lot of duty talks which are going on, but we were able to secure our contracts. We don't have a problem with our contract with the USA. Going forward, in fact, we are not supposed to fall under the reciprocal duties. We don't import this product to India, and it's an ideal situation where the US will drop duties for this product, and there's a lot of lobbying which is going on for this, and there's a lot of talk, and hope in a couple of months it should settle down and help the industry really grow the US market share. But overall, as such, we have grown in volumes. Our US volumes have also increased, but our overall turnover has also increased. So though the percentage looks same, but in volume and value wise, we are improving year on year. And going forward, as I mentioned, yes, our focus is to grow the US market, and hopefully this duty talk, if it settles down, it will become even a better play field to enter and do much better.
So sir, are margins similar in both US and Russia, or it will improve when you move to US, move some portion to US?
See, the industry's margins are almost the same. Russia's consumption is very high. Russia's you don't have FDA in Russia. In US you have something called FDA. So Russia buys a lot of volume. It doesn't really strangle you with a lot of things related on quality. But US, yes, it's a tough market. It's good for the best people in the world. So margins are almost the same because customers know each other, or you can say, everybody is well traveled, well exposed, and the product produced in Europe goes to USA. Product produced in Europe used to go to Russia. Russian products used to go to Germany, or vice versa. German products go to USA. So that way the industry is quite old. So nobody comes out giving us extra margins. But yes, they know our cost. They know what it requires to make a good product, and they know which company or factory is better in producing such products. And they pay better or less based on the quality which you provide.
Okay, sir. Thanks. I will join the queue for.
Thank you.
Thank you.
Thank you. The next question is from the line of Roshil Shilarka from Pink Wealth. Please go ahead.
Hello.
Yeah.
Yes, sir, you're audible. Please go ahead.
Yeah, sir. Congratulations for the great sets of number.
Thank you.
So my question is that in FY25, we did a sales of 251 crores. So just wanted to understand how much sales have been contributed from our old plant.
About 80% of the sales is from the old plant, 80 to 90%.
80 to 90%?
Yeah.
And
the new plant was operational only in the last quarter.
Right.
So, yeah.
So how much has come from the sales from the new plant?
Should be about 35 crores.
30 to 35 crore.
Yeah.
So sir, with this two combined capacity, the peak sales we can achieve somewhere around will be 450 crores. Am I right?
That's the target.
Okay. And so currently our order book is 82 crore. So are we seeing any visibility in terms of order inflow since this 82 crore, so we might be doing it in 3-4 months only?
Yeah, there are, I think, roughly around 35 to 38 crore order pipeline has already been under discussion. So I think today we closed some orders, and this week at least 50% of it will get closed. And a lot of orders come in the months of July, August, and September. So that way, we are, every quarter we'll be able to get orders close to 80 crores.
Every quarter.
Yeah, 3 to 4 months period, you can say.
And sir, are we seeing any slowdown in terms of order inflow, or the momentum has been as per our expectation?
It's good. See, it's good. What has happened is once we started the new plant, we are now able to cater to more premium customers. That is, previously we were, as I mentioned, we were the raw material supplier. That is, we were able to do more of industrial packaging. Today we are able to cater to new customers who request, products bottled and canned in their own brand. So this is a completely new business line, which has been only 10% of our business share earlier. So today, the good part and the best part you can say is that we are able to now forge hands and enter the market in a broader scope. Whatever be the global issue or whatever events are happening, it is not really affecting our volumes. We are able to, in fact we have a lot more demand which is prompting us to think about another line of to set up another line of production. That way our volume growth is really good. If the global scenario becomes better, we'll in fact come out really victorious.
So, sir, this retail packaging, which is contributing less than 15%, so in this year, have we set any target to reach in terms of percentage of sales? How much we can do?
For us, as I mentioned to you, gherkins is a volume product, and the industrial pack product gives us the maximum volumes. So when you, for example, if we touch roughly, if I estimate about a 300 plus crore turnover, the percentage share may not vary much, but the volume and the revenue share would have gone up for this particular product. So we are expecting year on year, averagely, if you take that particular line of production, we'll go easily about 30%. But on an overall scale, if you see, we may be 10 to 15%.
Okay. And sir, we are expecting only 30%, we have in presentation, we have given 10 to 30%. So it's lower side 10% and on upper side 30%, or how is it?
No, that is mentioned as year on year. That is, see, we don't want to speculate too much, or we don't want to talk on terms which, gives a lot of multiples. The plant capacity helps us to grow 30%, and we have an historical growth pattern, which we've grown about 30%. We understand the industry in such a fashion that 30% growth is easily achievable. But the sales targets are always at a higher scale, but we do not want to speculate on it.
And so for bulk packaging, is there any benefit for the client, in terms of tax or customs? So that is why there has been a lot of volume on the bulk packaging side.
See, for example, if you consider some products, customers prefer, for example, a German customer, he will prefer made in Germany products. He wouldn't go for the last line which says product of India. So as I mentioned, the raw material has to come from India, but the final product may be from Germany. So I mean, it is an entire customer's perspective which is slowly changing, that they are open to products produced in India itself. Secondly, the bulk industrial packaging carries lesser duty, as you mentioned rightly, that the duty for a bulk raw material product is much lesser than compared to a white label product. But not all have large plants where they can repack and make products in their white label. So they balance both. They sometimes buy both. They buy the industrial packaged product, they take it to the factory, and they repack it, as well as they buy the final ended product, which is completely ready from our factory, and they mix and match, and they try to sell it in the markets.
Okay. Got it, sir. Thank you, sir, for the questions.
Thank you.
Our next question is from the line of Dinesh Kulkarni from Finsight. Please go ahead.
Hello, sir. Thanks for giving me the opportunity, and a really good set of numbers. Congratulations on that. So last time we had discussed, something around, say FY27, we may hit something like 50,000, metric tons of production or sales volume. Are we still on track there, or do you think the new plant will, help us excel that number?
The new plant will surely help us achieve the number. Extension of the number is again very speculative and too early to push the volume. The number is quite large. 50,000 tons is like, it's a lot of kilos. So yes, the new plant will surely help us do about 50,000, I think.
Right. Because I see as you mentioned, the production growth is close to 30% year on year for the last 2-3 years. So we're still on track, we can safely assume, right?
Yes.
Yeah. Sounds great, sir. And just like say, how do you see in terms of revenue per metric ton or something like that? Is there a price increase we're witnessing in the last the 6 months or something like that?
Price increase is not really happening. As you know, global headwinds are very high. Wars at every end of the world is happening. So, prices are very stable. I'm about a decade in the industry, but the industry is about 3 or 4 decades older than me. So there's a set margin where the industry works on, set pricing where the customers work on. They generally don't fluctuate because they will have problems with the end retail supermarket chain where they have to go and change the prices and they have to change the consumer consumption patterns, which is very difficult in any product in FMCG or any eatable which you know. A 10 rupee product cannot become 12 rupees, and if it becomes, there's a drop in sales. So that way the 10 rupee product becomes 10, 10, 10, 20, 10, 25 with the years, and it's come to a very good position now. So price change usually doesn't happen.
Yeah, understand, sir. Because the question, the reason I'm asking is, are we not witnessing a price increase in our raw materials over the years? Because I assume, the price increase which we get from our customers should be in line with, the raw material cost, increase in raw material cost, right?
We have very few raw material considerably. For example, in industrial packaging, there are only one packing material, 1 or 2 preservative material, and the remaining materials are very negligible. So the 70% of the product is a raw material which we grow. So it's a hands-grown product which we have not allowed elevation in prices, and it's a consistently evolving product. It's not a rapidly costing product like any other industry. The raw material price does not go up. It's very much controlled as an industry itself. It's been in a very controlled fashion. And since we provide almost like a fixed price through the year, the growing patterns are the same. The farmers are also comfortable. So that way, the cost of 70% of the 70 or 80% of the raw material is covered, much covered. Secondly, we are in an export industry, and we have a strong dollar which consistently helps us every year. If any small variation happens, also we are able to cover off. Thirdly, the government also helps us with whatever support they can. It all the back end helps. It helps us in maintaining the same pricing through the year.
Okay, that sounds really great. So last questions from my end. Like say, you mentioned that we have somewhere around 4,000 plus farmers. So are we increasing our footprint across different regions within South India, like maybe some parts of Karnataka and Andhra, or are we just focusing predominantly on Tamil Nadu for now?
No. There's a very big difference in the last 3 years. Before 3 years, we were only present in Tamil Nadu, and we were sourcing through different ventures in Karnataka. Today, we have our own contract farming happening in Karnataka. We have a large community of people working for us. So the idea is to expand the farmer base because our requirements are consistently going up, and we want a fixed supply of raw material irrespective of whatever the market is. So that way we are now in 2 states with a very strong foothold, and every passing day we are adding on farmers. The 4,000 plus number is increasing on a daily basis, and the target, and we are not fixed a target as such, but the effort is to add more growing areas. Depending on the proximity to our manufacturing unit, we are trying to add on the farmer family number as much as possible.
Okay, that sounds great, sir. And like last thing from my end. So as you're witnessing, last 3 months at least, we are witnessing a very erratic, environment where the rain, it could be cloudy nature and something. Is this impacting the production or the farming?
Okay. See, we were predominantly a Tamil company. That was, as I mentioned, we were majorly in Tamil Nadu for many years. Today we are hedged in Karnataka, we are hedged in Andhra, and we are hedged in Tamil Nadu. So we have a different climatic pattern across all 3 states. Not one state has not all three states face a bad climate at the same time. Having said that, there has been an advantage that there has been an early monsoon this year. The rains have come much earlier. Based on that, a lot of farming has happened much earlier. That means it helps us receive the raw material much in advance and start exporting much in advance. That will help us also in growing our top line. So the advantage of exploring different geographies has really worked out for us. And climatic conditions, at least in the south part of India, they really don't affect the crop to that extent.
Okay, sounds great, sir. And the last thing, how much capex would expect for this year and next year, sir? Or is it all done?
The capex is almost all done. The 90-95% of the construction work and all is over. A little bit of finishing works are going on in the vicinities and all. Yes, having said that, it's an 8-acre plant. If you want some more storage spaces based on our customer requirements and based on our production capacity increasing, so we may have to build a couple of warehouses inside. That's all. Otherwise, most of the capex is concluded. There are a couple of other plans, but will not be the right meeting to put it forward. Probably in my next investors call, I'll try to put it across.
Okay, that really sounds great, sir. Thank you and all the best.
Thank you.
The next question is from the line of Varun Agarwal from Networthy Financial Services. Please go ahead.
Hi, thanks for the opportunity. Thanks for hosting the call. Before I ask my questions, I just wanted to talk about one conversation by my earlier participant. It was mentioned that 50 to 60% utilization in FY26 and 100% in FY27. I think there was some confusion there. And about my questions, I would like to know what is the impact of the geopolitical disturbances which are happening in Asia and Europe right now.
Okay. 50% was mentioned for the year 25-26 and 100% optimization was expected for 26-27.
That's right. He took it as FY26 100%, so I just wanted to correct that.
Okay, thank you. And luckily, the geopolitical tensions, I've seen every war bring some opportunity. I'm not talking in a selfish way, but the food supply chain is such that tough situations bring out good results in our particular industry. And luckily, we don't have wars in geographies which are large customers, are consumers basically. Iran, for example, is not in our customer list, and Israel, for example, is also not in our customer list. Iraq happens to be a large customer, and a lot of things changed after Iraq came out of the war and the sanctions. So I think once this is done and dusted, probably US should lift all sanctions of Iran. Iran is a very good consumer of this particular product. Unfortunately, in the last 7, 8 or 10 years, Indians have not supplied to Iran. So if at all the war ends in a good note, I think it actually would open it would give me an opportunity to at least do a large number in Iran itself. So let's hope it ends soon.
And with related to the shipping cost, as and when they increase, the customers readily accept the increase, or there is a lag of a few months in that?
See, customers are first knowers than us because most of the shipping lines are based in Europe. So any customer, any increase in freight is pre-informed to the customer than to us. Any decrease is also pre-informed to them than to us. So through the years, even before I know the freight, the customer has his price in hand and he knows that I'm going to work at this particular price. And we also try to forecast for them so that, we save costs. For example, next month, if we anticipate a freight increase, we try to work very close to the shipping liner so that we also, inform our customers not to suffer the $500 or $1,000 increase. So it's reimbursed basically.
So we've got clarity about the export business that we do. Are we planning to do anything or expand anything domestically?
Okay. Domestically, yes, we have a plan. It's a very broad-based plan and some groundwork is going on in it. Unfortunately, I'll not be able to disclose more details in this particular call.
Okay. Thank you so much and all the best.
Thank you.
The next question is from the line of Tejas Khandelwal from Prudent Equity. Please go ahead.
Yeah, hello. So this, sir, there is 10 crores of other income in FY25. So what is that? Because if you keep aside this other income, then our operating profit margin is around 14% only.
Okay. 10 crores is nothing but we have something called remission of duties and taxes. This is again what we suffer at the cost of our fuel and everything. The duties are applied on the export goods. In other way, you know that taxes cannot be exported and these are reimbursed by the government. It's just that either it can be categorized in other income or it can be added in the product's profitability itself. So this is a part of the cost which is involved, and there's a discussion now that this comes into the mainline income rather than other income. So this itself is about I think roughly around 4 to 6 crores, and the remaining is again forex gains. So again, the forex gains is nothing but on our export only, and as you know, in any export industry. The forex margins play a big part because there is a lot of speculation and there's a lot of hedging, and we as an exporter are allowed to enjoy a premium of about 2 to 3% in all our forward contracts. So that way, both are part of the industry, and we are good to assume that they combinedly can give us a good number.
Okay, so in FY26, what can be this operating margin, including all this benefits from exports and forex gains?
This again, I cannot speculate because it again depends entirely on the export volume. Roughly around maybe on the export, it will be about 1 or 2% will be an additional revenue. I mean, additional bottom line it will contribute to.
But can we just maintain 16-17% margin at operating level?
At operating levels, I'm not sure because as I mentioned, we are trying to be aggressive. We are trying to get into biddings of contracts, and in food industry, generally you can never expect a 15 or 20% margins, gross margins. So yes, I think what we are making now, we are consistently been making, and we are confident of reaching the same level. There will be some improvement as we try to do more of white labeling, and hopefully if at some point of time we have our own brand, that will help us achieve the number which you are speaking.
Okay, sir. And so I wanted to know this debt level. So what borrowings can we expect by the end of FY26?
It shouldn't change much based on what we have programmed. The requirement of funds for further working capital are not really there. But there are plans for certain expansion. But again, until it comes on paper, we are not able to project it now. But there will not be a major difference.
Okay, sir. And have you started taking orders for this new plant?
We have already started export. From January 2nd itself, we've started production. February, March, we've exported from the new plant.
Yeah, so this order book which you are showing in this investor presentation, this is including both. This is for both plants, right?
It is both plants, yeah, and the orders are for about a period of 3 to 4 months.
Okay, sir.
We are not showing future prospective orders.
Okay. And sir, I just wanted to know about this current ongoing situation between this Iran and Israel. So basically, we are exporting to Iraq. So around 12% of our revenue comes from Iraq. So any supply chain issue can create any disruption in our revenue potential?
I don't think so. Iraq doesn't come under any kind of favorability either with Iran or with Israel. And I mean, you know how US came and exited Iraq, and now it's more of you can call it an upcoming country than from the past. So like if you take it 6 years back, there were a lot of there were not regulations and there were a lot of sanctions. Today, a lot of sanctions have been lifted, and in fact, Iraq is now working on with international banks like Citibank, where the money comes directly from Iraq itself. There were years when Iraq didn't have an international banking channel at all. So that way, and in fact, Iraq is a neutral party in these. So I don't think there should be any issue in the ongoing war.
Okay, sir. Got it. And sir, another question was like, are you looking to foray into any new export countries in this year?
Yes, we have concluded a new contract with a country which we weren't there. We were not much in Hungary, and we've concluded recently with this particular country, a good volume, a decent volume. Similarly, there are a few other territories which we are in talks, and hopefully this year we should be able to enter those new markets.
Okay, sir. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Balaji from Kotak. Please go ahead.
Yeah, hi, sir. First of all, very good set of numbers that you have shown. So my first question would be, can you please explain about the seasonality of the industry? Because I want to understand that from your perspective. And yeah.
Balaji, I'll do it really quickly because it's an earnings call.
Okay.
Yeah. See, seasonality, we are now in 3 geographies, so every geography has its own crop. Tamil Nadu has a very good, last Q4 is very good for Tamil Nadu. Q3 and 4 are very good for Karnataka, and there's one intermediate 1 and 2 for Andhra. So that way we have a 360-degree visibility of our crop, about 200 to 250 days of arrivals of raw material at our factory. So basically, the word seasonality really doesn't apply here when you are able to cover all 3 districts. If you take one city or one state, then yes, you can say that you will have crop only in some part of the year. But as a company which is present in all these territories, we are able to have at least 8-9 months of good arrivals at our unit. So we rule out the seasonality part of it from the industry, and in fact there are products which we get when there are no gherkins. For example, baby corn comes in a particular period when the gherkins are not available. Jalapenos overlaps with gherkins and comes for a few more days extra. So that way we are now into 6-7 different vegetables which have their own climatic condition requirement and own arrival days. So yes, we try to maximize our productivity by running as many days as possible.
Okay. And there was also one more post by AKMIL, which said in April and May there was some signs of flow. And how do you see H1 to be?
Okay, it was not a post of AKMIL. It was a post by another, probably an influencer or somebody who had put wrong numbers. And as a promoter, I also had a discussion with my IR and PR and said it's right to give a right response to the wrong number. So basically, it was a speculation, and it's not based on official data or anything. Usually, April and May are slow months because these are summer months, and none of the vegetables are really grown, procured, or the sales really doesn't happen in this period. And as I mentioned, the industry has its own buying months and days when they procure most of the inventory, and there are some months which they procure less. So we cannot be compared like a machining industry or a forging industry on a monthly basis. We can be well compared on a half yearly or at least a quarterly basis, because one cycle of the crop would have almost got over or something like that. So you cannot compare us on a April to April basis, because sometimes the crop would have come earlier and we would have exported earlier in March, and sometimes April we wouldn't have exported, or May would have exported. So month-on-month comparison is not the right thing to do in a cyclical industry, as everybody knows. And we convince our investors to compare us on a half-yearly basis.
Okay. So I have one more question. So what would you say the industry growth rate for your kind of a company is? Because you are growing, say you are projecting yourself to grow at 30%.
I think industry is growing at about 9 to 10%, and probably I'm growing at about 30%, 30+%, yes.
So you are scaling at 30% because of being small, or how is it? Or if you mature, would you also continue to grow at 30, or how is it?
It's completely 2 different things. The industry is widespread. The industry is into different types of packaging. The industry sees different opportunities and through different eyes. So I will still say that there's a long way to go. I'm at about, I think, 10 to 14% of some market share I have for the gherkin industry. The other products, I am only doing about 1 or 2% market share, and I think that can easily climb up to 10-15%. So the basket is bigger now than it was in the previous year, and there's a large scope by saying that we need not compare it only with gherkin. We can compare it with the processed vegetables which are exported from India. So that way we have a large market which we can capture.
Okay. Okay. Last question from my side. How difficult or easy do you think to identify and acquire contract farmers?
It is difficult for a new company. You need to understand the product first. Second, you need to have sufficient working capital. Third, you need to have sufficient consumption. Without consumption, you're not going to enter the farming practice. And I call it an entry barrier. It took me at least 2 to 3 years to understand the farmer's chemistry, and you have to be a family with the farmer to have it's basically a long-term relationship. It cannot be a day or two's thought process. So it's a challenge. It is a first entry barrier in the industry, and these days farming is also not easy, and large companies are not good farming companies. So we are trying to have a essence of both, and we are trying to grow along with our farmer base.
Okay. Sorry, just a follow-up question.
No
So if you want to integrate more, it could be any integration, what would you do next? Vertical or horizontal?
See, integration is something which is possible, where I can integrate and launch my product in India, and I can do a few more there are a few more processing techniques like dehydration, which can help me launch in India and some countries. So that particular integration is still pending. And thirdly, is we are almost very close to the ready-to-eat segment, where your chili sauces, your anything which you compare in ready-to-eat can be possibly integrated into this value chain, because we are at the sourcing level. We are very strong at the sourcing level. As we are very strong at the export market level. So export goods, as you know, are any day they pass through even stringent quality norms and the Indian standards. So that way we are well equipped to launch and integrate other products and other packing methodology in our ecosystem.
Okay. Fine. Thank you. That's all from my side.
Thank you.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Hello.
Yes, ma'am, you're audible. Please go ahead.
Yeah, congratulations on the great result. I just have 2 questions. One, clarification on the margins. So you said that we'll maintain 14 to 15% margins for the next year or 2 years?
Hopefully for the next 2 years, ma'am.
For the next 2 years. And that will be the EBITDA margins, correct?
EBITDA margins are around 18%, I think.
So the 14 to 15% is are we expecting those to be a PAT margin?
I think we'll be somewhere here only, ma'am. A little bit of improvement is expected.
Okay. And with more value-added products, what kind of split are we expecting between that? So how much will our value-added products contribute in FY27 or 28?
Though the contribution individually may rise, but on an overall level, the contribution of pickled gherkins is always going to remain higher because of the large market which is available from India, and we are only at about 10 to 14%. So until we reach the pinnacle of the last part of it, the other products will also grow, but will not look very determinant when you compare this particular product. So yes, year on year, I think 5% of growth of each product should be there individually, but on an overall scale, they may sound at somewhere around 2%.
So 2% contribution to the overall revenue.
Vegetable. I'm saying about vegetable to vegetable.
Vegetable. Okay. And we mentioned that we're starting our own brand. So any timelines when that will happen, or maybe after FY27?
Not the right day to talk about it, ma'am. There are a lot of plans which are going on. There are a lot of progress happening in that also. So, I mean, we already had our brand in Russia some time back. I mean, given an opportunity, we are also working on it to have our white label own brand in other countries soon. Domestically, we are also planning to have some products which can help us, reach our customer and investor base as well.
Yeah, because having our own brand in the export market will also cause issues with our own clients. Isn't that right?
We wouldn't enter such markets, no. We know markets where we are doing branding for some customers, the white label product. But again, as I mentioned, the market is still very large for us. We are a very small. We have not achieved even a 10% market share in white label products. So it's a large market, and there will be some headwinds, and hopefully that time we will not try to be direct competition with our own products or own customers.
Okay. Yeah, that is it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Prabal Jain from SM Holdings. Please go ahead.
Yeah. Hello. Hi, sir. Am I audible?
Yeah, please.
Yeah. Sir, actually, I wanted to understand the nature of your revenue. So you said that in your opening remarks that you have 80 crores worth of orders in hand. So let's assume, not even assume, you did 250 crores in FY25. So is there any component in your revenue which is like a recurring revenue based on some long-term contracts you have, and that is like different from the order book? So order book, I'm assuming come and serve basis, like comes 80 crores, you serve it, and then there is a fixed recurring component also in your revenue. Is it like that, or it's totally order book revenue?
It's totally order book revenue only. We have not spoken about the orders in the pipeline or the orders in the final stages of closure. We've mentioned order book, which is of last week, and these are not like there are some contracts, as you mentioned, are recurring contracts, but the quantities and the volume keeps changing. For example, the contract will remain the same. The customer will place another order, or probably of a certain value in a month's time, something like that.
Okay, noted. So, sir, in that case,
I have a 1-year contract with a particular customer. Every 3 months, he would come and give me new quantities. That's how some contracts work, some long-term contracts.
Oh, okay, sir. So it would be helpful, if you could disclose in future, like your order intake as and when you win any significant orders. That would be helpful for us.
Sure.
Sir, second question would be just wanted. Yeah. Please go ahead. Yeah.
Go ahead. No. Going forward, we have some plans. Just for competition reasons, we are trying to stick to our own number.
Okay, sir. Makes sense. Yeah. So, sir, I also wanted to understand, like at 250 crores, you approximately did 220 from your old plant, and right, 220 was done from the old plant, and 35 you did from new plant, right?
Approximately, yes.
Yeah. So now you have 50 metric ton was in first unit. Second unit you have 50 metric ton, which is scalable to 100 metric ton, as I inferred from the call recently. So you have a total of 150 metric ton capacity, right?
Correct.
So, sir, when do you expect, like based on your experience, like to have 100% utilization, and by which level of utilization, let's say 70-80%, you'll start planning maybe a new unit or something like that?
See, any new unit takes 2 to 3 years of materialization time, because today constructing and planning a new unit is not as simple as the previous years. And in fact, being in a specific industry, you need to be very close to the raw material. So that would be the main target. So what we plan to do after 2 to 3 years, we are already in some thought process that discussions are going on. Having said that, the existing unit also has expansion capacity to, the peak of its production will reach only by next year. So this year we should be doing about 50 metric tons per day, and hopefully by next financial year we should be able to touch about 75 to 100 metric tons a day. And by then by next year financial year, we want to have another processing line, which will help us to grow another 30% from that particular plant.
Okay, noted. So, sir, just to have a clarification here, you said new unit takes 2 years or so, worth of time to plan and something, and you came with your IPA somewhere around October 2024. So, and you raised money for the capex for the new unit. So, and you commenced it, right, in the next 7-8 months. So on one hand, you're saying it takes 2 years, but you commenced quite quickly. So were you planning it beforehand?
No, let me explain the process. See, the land was acquired during COVID. Roughly around 2018-19, we had acquired the land. I think 1920 we had acquired the land. We started a little bit of ground development work, a little bit of acquisition work. I mean, we wanted to have a bigger factory. We had a 5-acre land, then we went for an 8-acre or a 3-acre addition to made it an 8-acre land, and planning and approval took us some time. So in the IPO, we just raised money for the machinery. The construction was already at 70% of completion. Through our internal approvals, we have funded, I think, close to about 18-20 crores we have funded from our internal approval, and we've constructed in the previous year itself. That basically was a work in progress, and this year, if you see our assets, they are about 50 plus crores. So this particular factory took us about 3+ years. So that I take it as a thumb rule that if you want a very good nice factory and with a sufficient packing capacity, you need at least 2 to 3 years for it to come out of good shape.
Okay. So I know you have been hinting a lot in the call that you have some plans which are on paper, but because it takes 2 to 3 years and by next 2 years you are expecting 100% utilization of Unit 2. So I'm assuming on paper like you must have started something on the expansion line. So it's fine.
Yeah.
You can come back
on the appropriate call. I'll update you probably in the coming days.
Yeah, sure, sir. And sir, my final question would be, you have mentioned that you have explained us the cost dynamics, like the way you procure from farmers and the way you sell it. So you mentioned that price-wise, mostly your product remains in the stable range. So it's a game of volume, and for volume, obviously, we'll keep on adding up the capacity. I wanted to understand in the next 2, 3, 4 years how your revenue lines, like, are there any new revenue channels or revenue sources? One is this D2C type stuff you can do. One is the branded product line. I think I heard something on that. So you can throw some light on the next 2, 3 years, how you see your revenue channels evolving, like any new revenue lines you have or you are planning to explore.
The domestic part of it, we have already started exploring. We are in talks with, how we are trying to learn the dynamics of it. It's completely different than the export market. The revenue line, the competition for some products is really high, and the margins of some products are very, very low, and some products are really good. So we are trying to choose products which are of very good margins, and in fact, there are some products which are already there in the domestic market which we are not selling. We are just exporting them. So it is very easy or a channel which is already open. It's just that we are taking it step by step because we are running on full capacity, and our priority is to optimize our production from the second unit. Yes, having said that, there is a new revenue line planned, and hopefully in the coming months there should be some positive news out of it. The second part of it is intrinsically adding more products, because we are only doing about in our 5 product basket or 6 product basket, one of the products contributes to our major revenue. But there are many other products which are also preserved and exported in similar fashion. So that is also a priority, because export markets bring in us with the bottom line can be really good in export markets, but when you take it domestically, the margins can be sometimes really thin. So we want to have a very sustainable model upfront, and then explore the domestic market with some products which have decent profit margins.
Okay, sir. Noted. Final question, sir. Would you be able to name some of your clients, some reputable clients, some retail chains around the world, or maybe any local retail chains, if you have some renowned clients?
Unfortunately, over the call, I would not be able to name them, but yes,
that's fine.
Top two. I mean, probably you can write to us, and if you are comfortable, we'll surely dive into the details too.
Okay, sir. Thank you. All the best. All the best. Yeah.
Thank you. The next question is from the line of Sahil from Samdharya Capital Ventures. Please go ahead.
Yes. Am I audible?
Yes, sir.
So one small request, and I don't know if it's already been discussed with your internal team. Are we planning to release some quarterly one-pager summaries going into FY26? Any insights on that?
That is in plan. Yes, we should be able to do it from hopefully from the end of H1. We are planning something like that.
Okay, sir. And this second unit presentation that has on.
Sorry, I'm not able to hear you clearly.
Mr. Sahil, we can't hear you.
Hello.
Hello. Yes, sir. Please go ahead with your question again.
Am I audible now?
Yes, sir.
I wanted to ask the second unit, which is mentioned in the presentation at 95% utilization. So, has it already started operations? I mean to say, it is reflected.
Yeah, it started operations in January this year.
So it is already reflecting in revenues in this year.
Yes.
Yes, sir. And the land that you have mentioned for the upcoming expansion, what is timeline for that?
The upcoming expansion. Okay, the current factory will take about a year to become optimized. The new plans I have not divulged anything over the call. Probably in the next call, we'll have some more details.
All right. Thank you.
Thank you. The next question is from the line of Miten Shah, an individual investor. Please go ahead.
Yeah. Am I audible?
Yes, sir.
Yeah. Thanks for giving the opportunity, and congratulations on posting a good set of numbers. So my first question would be like, of all the products that we have, gherkins, jalapenos, baby corns, which product gives the highest margin?
In the industry, almost all of them carry equal margins because the end customer is also very similar. I mean, a customer who buys gherkins buys jalapenos and similarly baby corns. But revenue-wise, I think baby corn is an expensive product, and yes, sometimes it carries better margins. But geography to geography, product to product, everything is variable, and we see gherkins has consistent margins, and the others are all a little more seasonal. So it depends country to country, that some countries provide better margins for a particular product and some countries provide thinner margins for some products. So you cannot unilaterally say that this is a product with high margins. They are all in the same industry, same preservation method and same consumer also. So almost all of them are with the same margins.
Perfect. And one more thing, see, we are a 100% export oriented company, sorry. Okay, and we just heard in the con call, there are plans to tap inroads, locally as well. I mean, after 10 years, why was not that thought earlier on? I mean, how big is the opportunity in India, especially for pickled gherkins actually? Or does the industry already exist in India?
Sorry?
Does the industry for pickled gherkins already exist in India?
Yeah. See, today it is almost present in a ready-to-eat segment. It is like, for example, traditionally what we do, we buy vegetables, cut them, and use it the same day. This particular preservation method gives you a longer shelf life, and it is like you get a ready-to-eat product, and it's also customized. It can be chopped into small pieces at the manufacturer level itself. So, and there is also a lot of flavoring added to it. If you have a globetrotter, if you've traveled or stayed in America or Europe, you will probably come back to India and consume this product. Otherwise, there is no knowledge or awareness of this product. Previous years, we were mostly sold out. We never had an opportunity or capex or the working capital to say that we'll start in India. Because as you know, India goes on a distributor model. The geography is large, and there's separate investment required to store, produce, and there's a lot of marketing also required. So that way, we had the focus to have good margins first of all in the food industry. So that we focus more on the exports because it's always traditionally been the bread and butter, and it's always helped exporters to sustain the business. Going forward, we have more opportunities, we have more exposure in the market, and also a lot of awareness has come in the last years after the era of COVID. So we see that there's an opportunity, and we want to expand locally also.
Correct. But how big is the TAM in India? I mean, what is the approximate TAM for this product?
I don't have the numbers as such, but again, it is not seen as one particular product, and it is seen as a ready-to-eat market.
Okay. Okay.
So once you enter this segment, you are entering the ready-to-eat market segment.
Okay. Okay. So at India, exporting the world's largest, 15%, who is the next, which one is the next country with exports the largest after India?
Maybe Turkey, and there is also the same product produced in Europe, USA, and Russia as well, at a smaller scale, because they don't have the method of contract farming, and they don't have so many farmers basically. It's a laborious job. So yes, India happens to have the major. India happens to be the major grower, and you have smaller countries like Vietnam, and so I mean there's a little bit of production everywhere here and there, and you can say Turkey as a major competitor sometimes, and you can also classify the local produce of Russia and USA as a competition.
Yeah. Why I ask this question is basically like when we say, suppose, if we understand Turkey probably is the next largest contributor, is there a difference in the quality between us and other export-oriented countries?
We can probably say that our gherkins are the best in the world.
Okay.
Our exports, in fact, I'm very proud to say that India exports the best quality product through its years and ages and decades. We polished our product so well that globally we are, there cannot be so for example, US cannot be without China. Like that, you can say world over, Indians play a very smart role and an increasing role in the goods which they export. So the quality from India is guaranteed any day that it's going to be much better than your Vietnam or your Thailand or your Turkey or your Egypt. So we also import some products from these countries, and they come in a really bad condition. So eye to eye, I can see that any day we are the best.
And how about the pricing difference?
We are at the best again. Probably Vietnam or Thailand may have a little bit of pricing advantage, but they cannot do the volume and they cannot do the sophistication packaging and time. They cannot stick to the timelines. We are a more organized exporter country than compared to these people.
Correct. And what would be a typical shelf life, especially for this kind of pickles?
In the industrial packaging, we give about 18 months or 24 months of good shelf life, if not tampered with and stored in ambient conditions. And in the white label, sometimes it is about 24 to 36 months. If you are opening it, yes, the shelf life is only about a week or two, because it becomes almost a ready-to-eat product.
Perfect. So just one small question. Like of all the 251 crores of revenues that we did, were there any rejection or failure rate basically? And how much of that would be in terms of percentage?
Very negligible. I cannot even have a value. It's very negligible, and mostly that is also packed and re-exported.
Okay. My last question, I'm sorry, but not take much time basically. Like at 10 years, in the industry, and with, I guess almost 51 competitors, as I see in the presentation, where is the saturation now? Is the saturation achieved or we have not yet scratched the surface? I just want to know what is the TAM and how bigger the TAM could be. With already 10 years in the industry, I don't know now what best, after setting the second unit, I don't know what is the TAM that could be expected from this industry. How many more gherkins can we produce and export? So that is what I wanted to know. Where is the saturation basically?
Basically, out of 51, only about 15 or 20 are names which can be mentioned. The remaining are all farmer investor companies which are very small. You can call them sometimes as FPOs also. They don't have capex and they don't really export the produce. The remaining 15 people, in which about 7 or 8 companies have this, in fact, the machinery to make the white label goods. The competition for white label goods is very limited or a very small circle, and it can be fingered out simply. So yes, we are an industry of about 20 good exporters for the industrial packaging, and the industry of white labeling or the circle is small as much as maybe 5 or 8 numbers. And we are at a very basic level at the white labeling, and there's a large scope I mean, we scaled well in the industrial packaging, and there are scope to scale in the retail or white labeling, basically. So that way, until we reach a market share of about 35, 40 or 50%, I don't think we are seeing any headwinds. We are having more orders, and we need more of production lines to worry about instead of worrying about the industry.
Correct. So at 10% market share, are we the highest or where do we stand?
Second or third, I think, maybe. Third.
Can we know, I mean, who is the top one or top two player?
There's one company, a very good company called Global Green. They are pretty, I think they have 2 or 3 decades experience in the industry, and they're more into white labeling than the industrial packaging.
Okay, fine. But I mean, I really appreciate, and I must confess, you are one of the best entrepreneurs I've seen in recent times, and really congratulate for that, and feel very proud. Thanks a lot for the opportunity.
Thank you so much.
Thank you so much.
Thank you. Ladies and gentlemen, due to time constraint, this was the last question for today's conference call. I now hand the conference over to Mr. Rajdeep Patil for closing comments.
Thank you, Mr. Junaid, sir. And thank you to all the participants for being a part of today's conference call. We hope the discussion provided valuable insight into Freshara's business and future roadmap. If you have any further queries or require additional information, please feel free to reach out to us at info@akmiladvisors.com. On behalf of management and AKMIL Strategic Advisors, thank you once again for your time and participation. Have a great evening. Stay safe, take care, and thank you.
Thank you.
Thank you. On behalf of AKMIL Strategic Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.